Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Be sure to subscribe. Hit that button on YouTube, BitChute, SoundCloud, or get your RSS feed set up in your podcast application. I have a new microphone today. I hope it sounds clearer. Don't hesitate to give me some feedback. It's a beauty from Australia. Anyway, we have Markay Latimer, who is a long-time financial educator and trader, and she was also a speaker at the New Orleans Investment Conference. Her website is markaylatimer.com. We'll have it in the show notes. Markay, your claim to fame, I guess, is that you are bringing trading to the masses. That seems like an odd thing to do. Are all these people just gluttons for punishment?
No, not at all. And it's crazy. I've been teaching people how to trade the markets for over 20 years now. Just so you know, I started when I was 12, so
Okay. She's still a very young lady. Yes.
Right. No, but a long time. And it's funny because it's a world that almost feels unattainable. And I do get really bothered with that talk of, the market is only for the 1%ers, right? It's just not. It's for everybody. And I love sharing that. And now with COVID lockdown, you see more and more people interested in the market, and brokerage numbers are signing up new clients like crazy. But a lot of people get in and they don't understand what to do yet. So
you're right. It is such a fascinating time with the whole, I'm not sure what the name of the subreddit was that got engaged in this, but it showed that actually the masses can have much more influence than they might have otherwise realized. Now, there is, of course, and I must admit, I'm not a trader. So, I'm an investor, but I have not really been a trader, so to speak. So you're going to be educating me here too.
Right.
So why don't you tell us, why should people make that jump from just having long investments to actually getting in and out or being more involved in technical analysis?
You know what? I really like the diversification of both. There is an absolute strong case for just parking money in a good stock and collecting the dividends. But where the trading side comes in is you can take stock that you own and you can rent it out. So you can bring in income in addition to the dividend from stocks you own. And that is a part of trading. And that's really a great way to go. There are also many trends in stocks that you can take advantage of. And whether it's a stock or an ETF, there'll be things that become really exciting for a while. Like for right now, you see a lot of electric vehicle stocks flying. You get a lot of even semiconductors with the talk of new metaverse. Well, you can go in as a trader and you can enter a position and take advantage of the electric vehicle stocks while that sector's hot. Not all of those stocks are going to make it. They're not all going to be around. We don't know which electric vehicle makers, other than Tesla, are here to stay. So on the trading side, you don't have to pick the one or two or three companies that will be here long term. You can take advantage of just any of them that are making good moves, but your trades may be, anywhere from a week to maybe 2 or 3 weeks. So you're not day trading. I think that's really hard. I don't know a lot of people that really make good money day trading. I feel like it's risky and it takes more time than most of us really want to put into, right? So I feel like trading and using technical analysis, you get that midterm. You're not quite the investor, but you can take advantage of some of the moves that are pretty great, even though they may not be sustainable for the next 20 years. For the next 2 or 3 months, they're pretty great, right? And you can capitalize on that.
Yeah, that's a great point, because with the day trading, you're really competing with a lot of even algorithmic traders or just hard professionals. But on the other hand, very few companies are profitable decades in a very, very long-term fashion. So just buying and hold, you're basically saying there's a middle ground to have both strategies at your disposal, to be a long-term investor and also to be more just actively engaged. So in some ways, being a trader is almost a misnomer, just someone who's actively engaged in the markets.
Right. Yeah, exactly. And I think that's an important thing to keep in mind, that you do have these, anyway, I just love it. These great opportunities, and you don't have to take on a lot of crazy risk. You're kind of balancing, you're marrying the trading with the investing side.
Right. And I mean, because the truth is actually, and I'm speaking to our audience here a little bit, that people who are buying mining stocks, which is what a lot of people are interested in, are taking a high risk relative to other stocks, because most of the mining stocks people are investing in there are no revenues, right? They're just prospecting. So people who are listening to this have already shown their interest in taking a little bit more volatility than others, perhaps. And we discussed before we got started that you're not necessarily a mining stock or gold bug, but you do see them as playing a role for diversification, and you prefer to go with the ETFs, right? So why is that?
Yeah, I do like the ETFs because you have a basket of stocks. So, and the ETFs, they're great right now. You get so many different baskets of stocks that are just based on a variety of sectors. But I like dealing with like the GLD when I'm looking at gold, or SLV on silver, right? But what it does is it spreads your risk. It's kind of creating your own little mini mutual fund without having to pay all the fees and things that a mutual fund will charge you.
Right. Yeah, of course, that's why ETFs have just skyrocketed over the last 20 odd years, because they do deliver that diversification and low cost. Yeah, if you're not going to just buy 100 different stocks, whatever, on your own, you can buy just one ETF and get the same diversification. So it is not a bad way to go. And there are many mining ETFs available. Of course, the most prominent one that people in this space would look to is the GDXJ. So to the junior. I'm not sure whether you participate in that one or whether you want to give any thoughts on others to consider.
Yeah, actually, the only two that I've actually traded in that space are the GDX and the GDXJ. But I've liked them. They're pretty great. And you get really nice chart patterns, which makes it, from a charting perspective or a trader's perspective, you can identify the entries and the exits.
This is somewhere where I want you to enlighten me a little bit, because I hear all this jargon, which, I mean, I've been doing this podcast for 5 years now, and still some of it goes over my head, where people talk, well, we've reached the threshold level or a breakout level, and I'm going, sometimes I don't know if I can see this, so I mean, of course, we would say that just this past week has been somewhat of a breakout for gold, actually, because of this crazy transitory inflation. And I feel people just suddenly realize, you know what, it's not getting less, it's getting more. So maybe gold, had a bit of a jump, but I don't really know how to interpret a lot of this language. And I know in the academic world of finance, people basically poo-poo this language, right? How do you push back against that and say, actually, there are resolute definitions to these terms, and we can apply them in a methodical fashion?
Yeah, when you're talking technical analysis, right, it's just looking at a chart of a stock or an ETF and seeing, where the price is going. The thing is, it's weird, and I get it. What on earth does, what gold did last week, what does that tell you about going forward? But it really does, because if you think the way markets move, they move on emotion, right? It's us individuals that are buying and selling these stocks and these ETFs, and we get overly excited and we buy things and they go up too high. And we see that in the chart patterns. And then we get overly scared and we panic sell and things go too low. That is where the technical analysis piece comes into play. Now, when you talk technical analysis, you can get into probably thousands of different indicators. I don't think it's helpful. I think it's just really important to look at the actual price action, because then you see where the money is really going. Is it going up or down? I keep technicals very, very simple. And I can tell you it does work at helping read the emotion. That won't be 100% accurate, right? It's not always going to tell you, oh, this stock in week will be exactly at this price. It doesn't work that way, but it gives you an idea of whether you want to be bullish or whether you want to be bearish and kind of stepping aside for a little bit. And I think that's where technicals are unbelievably helpful.
Yeah. And I have to, to be frank, it's something that I really want to learn more about and devote more time to, because we've actually done a few shows on let's say the shortcomings of the efficient market hypothesis.
Right.
We're saying that it's totally irrelevant, but of course nothing is 100% efficient, and some markets are more or less efficient than others, and of course the thinly traded stocks are even less efficient. And right now, of course, the big area for technical analysis is these cryptocurrencies, which seem to be just all over the map. And as I said in the previous episode, I see a lot of these plays or a lot of these stocks as beauty pageant investments where it's based on how good something looks to the crowd. No one really knows the actual future profitability. And as you said, that is the way humans behave. And right now, I've been studying the CFA Level 2 curriculum and just looking at people who want to do foreign exchange trading or Forex trading. And one of the things they make clear is that no one really has a good handle on how to predict in the short run exchange rates. And often it goes counter to what you would expect. So you would think that higher interest rates in a foreign currency will lead to a depreciation relative to yours, but then it doesn't happen. And so even the CFA, which is one of the most conservative institutions in the field, is saying that there's a great deal of uncertainty. And I guess the natural assumption, which they don't say, is that there's got to be a lot of room for technical analysis there.
Yeah, I agree. Absolutely.
Yeah, and so, but how can one get started then? Because we hear that there are technical analysts, and I know you're the lady, you've got your YouTube channel. There is even I think it's a chartered market technician. There's a professional society. I'm not sure whether you're a part of it. What steps can people take to really dip their feet in the water?
You know, one of the best things that I ever did was I learned how to read something called a candlestick chart. And it really just shows you where that price action is going. And it is just a different way of looking at a price graph. And that's it. And if your members want here, if your viewers want, I've got a link to a free ebook that we could put, maybe you guys could put it in the session notes. So
go to goldnewsletter.com/podcast, and we will have the link to, it's markaylatimer.com and markaylatimertrades.com. And her free ebook is at markaylatimertrades.com/candle. And of course, this is just, if you go onto any trading platform or any discount broker, you'll see these candle descriptions of the price trends. And so, okay, we see these candles, and just understanding what they mean is going to give us a sense for how to interpret them.
It really will. And it is something that I think you want to keep it very simple. This world is easy to get sucked into a bunch of complicated formulas and things. In my opinion, I don't think that helps. And the normal person, we don't want to spend time figuring that out, you know? So when you learn to read candles the right way, which I think I did a pretty good job breaking it down in that free ebook for you to get you a good start. But it kind of tells you from the candles, how to read the emotion. You know, and the emotion is just, it boils down to, are people buying this or are they selling it? You know, and are they buying it in droves? You're going to get some really bullish candle patterns there. Those are things you want to be buying. Those are things you want to be bullish on. When that emotion slows down, you'll see it in the candles. The candle shape they'll decrease, they'll change. You'll be able to recognize that, and that's your exit for a trader. So you want to just keep it real simple. It's a world you could really get sucked down the rabbit hole. And I just don't think that's that helpful for most of us.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
This is the Inventa Capital interview, and we have Charles Funk of heliostarmetals.com, or Heliostar Metals, and we'll get the URL there, heliostarmetals.com. And the ticker symbols are HSTR for Canadians or on the Canadian exchange, and then HSTXF for the Americans doing the OTC. Now, there's a lot of action here. We have documented or written about Heliostar Metals in Gold Newsletter, and Brian London has it down as a buy. Also, Brent Cook has spoken favorably about it as recently as the New Orleans Investment Conference. So there's a heck of a lot going on with this company. 2 major projects, one in Alaska, one in Mexico. So what is the key information people have got to know? What are the latest developments?
Yeah, thank you very much. Lots of high-grade gold hits to expand on. That's probably the key, and for an exploration project, that's pretty rare. We've just returned some really strong results in Mexico in Sonora, and we're just about to start drilling that. We think we can have a win there in the next few months. And then in the bigger picture, our Unga project in Alaska, high grade, and we think can be much bigger.
Yeah. So one thing that's interesting about these is that you are near to actually drilling, like you say, getting things out of the ground. So what is the time frame for these 2 projects? And the key is that my understanding is early next year there's going to be more action. So there's maybe a window of opportunity right now.
Yeah, so we just closed a $4 million financing. I think we just had the last drill contractor at site late last week to get the quotes.
Yes.
We'll be underway any week now. With Christmas, it'll either be we get going in the next couple of weeks or very possibly the beginning of next year. And so that means we'll have news in February from our Kumro project. It's a great discovery, over 500 meters of strike. We've got multiple economic intercepts on surface. Incredibly, it's never been drilled before. So we think we can have really, really good success there in what's a pretty exciting, never been before drilled property.
Yeah, and I've been listening to a few of your other interviews or media hits, and I actually like the Alaska story. So this is Unga. I don't know how you pronounce this. I assume it's a native word, but the Unga project in Alaska, where you basically dug up almost like a forgotten quasi brownfield option, which people had just overlooked for many years.
Exactly. This was Alaska's first underground gold mine. Incredibly, no one drilled the mine from that day until we got hold of the project last year. We think we've got a huge district. There's already a 384,000 ounce resource at 13.8 grams per ton gold, extremely high grade. But it's a district and there's so many more targets, and our drilling this summer really demonstrated that. We drilled 3 meters at 88 grams gold in the extension of the old mine. We found a new zone called Aquila where we've got 4 or 5 intercepts. We literally could be onto the chute. We've just got to step underneath and expand it. So high grade, and people had, as you said, missed that the small resource could be part of something a lot bigger, and we're well on our way to showing that.
Do you want to talk a bit briefly about the diversification maybe between the 2 mines and how they balance each other? I know one obviously has the winter favorability in Mexico, but is there any other reason to see them as 2 projects that go well together?
Yeah, it's interesting. We put the 2 together initially on prospectivity. I've been lucky enough to have a background of discovery success. So if we don't think the projects are big and potential of finding a big resource, we don't own them. The projects in Mexico were earlier stage and they just needed work to get to drill ready. And honestly, we were surprised how good the results from Kumro were. So strategically though, as a company, we can be drilling in Alaska for 9 months of the year, sort of from April till November. But there is a few months down period while you're in the exploration phase. And so that means we can pivot to Mexico in the winter and then back up and push on our main flagship Unga project. It's rare and it's nice to have 2 strings to our bow.
Right on. So yeah, the tickers are HSTR and HSTXF, and go to heliostarmetals.com. Otherwise, if you're not already, be sure to get the gold newsletter, monthly newsletter. And Brian has an excellent profile of Heliostar. And yeah, like I said, it's a buy right now. So in great position. Also, as Charles just said, there's a lot of action which you want to get in before, because in the new year, once more information gets in, of course, more institutional players will be on this. So Charles, thanks for your time. We appreciate your sponsorship, and we're glad to work with you.
Perfect. Thank you. It's going to be a fun few months.
Markay, this may be a bit of a challenging question, but we've had another, I guess, long-term trader on the show, and he said that one of the challenges that often the people who are really pushing the frontiers don't have a lot of incentive to share their wisdom. So what makes you different in that? Why have you decided you just enjoy being a teacher? What really motivates you to share this with a broader audience?
Yeah, you know what? A lot of it came from the fact that I don't like trying to get home alone with my computer. I just don't. I get stir crazy, get bored. And now I've got, I started trading before I ever had kids. Now we have 3 kids. They're great. I love them. However, it's just nice to have some of that adult interaction and hang out with other people that are traders. That's the most important. I love that. I do love teaching. I love hanging out with people that are traders. I also love the fact that you could set this up as a business. When I do some teaching, I can write off my computer, the portion of it, that I'm using for teaching of that sort. So,
yeah.
It's here, but it's mainly hanging out with a community of other traders. That's the most.
Well, you do break the stereotype of the overweight guy behind his computer up until whatever time it might be, setting his trades. So, right. Yeah, and that's an interesting element too, that so much of this knowledge gets passed on in a person-to-person fashion. And I'm here in Colorado. We have a great Kaya group in Denver and a CFA society for the state as well. Do you lean on those professional societies or networks, or you just basically build your own little network?
Just kind of built my own little network of people that are traders that either are already traders and doing well, or those that are brand new and want to get involved, or people that have started and they're just, maybe not doing well yet, but trying to figure it out. So in fact, one of the gentlemen that I met through some of the classes, he's done phenomenally well, and he lives in my area. We're going to meet and hang out and chat. And he's going to show me some of the stuff he's been doing. We're meeting tonight.
Right.
It's just a neat way to meet other traders. And I feel like when you have a group of traders, right, we all together can come up with the answers. And I love that idea of working with other people where everybody's making each other better, right? So we don't really necessarily need the experts, and we can read and learn from them and see what they're saying. But then together as just, individuals, non-professionals, we can do this and learn from everybody and improve. So take what the experts say, but just together, I think we can figure it out in maybe a better, more applicable way for a non-professional trader.
It's almost like a Robin Hood mentality, the view that as this decentralized world we're moving into, more and more people are realizing that the, purported experts, that they're not as intimidating as they seem to be. Right. And so it is a great time to be engaging. And of course, the presence of these discount brokers they are making things so much more accessible. And not only in the United States, but in other countries too, it's spreading, which is wonderful. So I'm so glad that there's more participation. Are there any risks or downsides to, let's say, the democratization of stock markets? Does that mean there's even just more opportunity for the likes of you and others?
I think there is just more opportunity off of that. And, the more traders, more opportunity. And of course, we know there are risks to the market in general, but I think generally speaking, all of the changes that are coming and all the new traders, it is just creating more opportunity for everybody. Yeah,
well, I on our last episode with Graham Neary, the Irish gentleman, he said that something like 1 in 5 Americans now has been trading cryptocurrencies.
Wow. Isn't that crazy?
I feel like that says a bubble. But anyway, so just my opinion.
Yeah, probably. Yeah, but here's the thing. It could be a bubble, and definitely some of them are, right? They're not all going to stay around. So why not take advantage of it when it's there and when we're in the bubble, but be able to spot when the bubble's getting close to bursting, right?
I don't even know how. He said he recommended using Coinbase as a potential item to short, but when it comes to cryptocurrencies, and I don't know how much time you devote to them, are there any other ways to basically make trades or assume that there's going to be a downward shift in the near future? Because they're not traded. I mean, I think there are some cryptocurrency ETFs now, but in general, they're not really traded on stock markets.
Yeah, one of the things, like he mentioned Coinbase. You've got Coinbase, you've got Mara, you've got Riot, you got HUT, ticker is HUT. It's a miner. There are a lot of stocks, surprisingly a lot of stocks that are based on crypto one way or another. So then you're not even going through the complicated steps of, setting up the wallet. When I trade just in Coinbase because it's been pretty straightforward. But I know, if you get deeper into it, there's a lot that can be overwhelming. But on the stock market side, you're just trading with a normal broker. And those are few to look at. There are ETFs on the crypto sector all the time, and new ones coming out all the time, I should say. TO is one that just came out within the last few weeks, I believe. In fact, when I was speaking at the New Orleans Investors Conference, that was the first day that BITO was traded. And what's interesting about that is it is based on Bitcoin, but it's based on the future value of Bitcoin. So that can have some pretty wild swings. So it's an ETF based on Bitcoin futures.
Crazy.
Yeah, right.
Yeah, I mean, we're entering a new frontier. This is just uncharted territory. So, okay. Now, you focus also on just the GLD. So you mentioned the ETFs, and I guess GLD maybe technically is an ETF. I'm not sure because it's not, you're not buying a stock, you're buying actually supposedly paper gold or paper representation of gold.
Right.
And you just for convenience, you go with the GLD?
Yeah, just for ease and convenience. And it just gives, I think a good picture of what's happening with gold. Sometimes I'll go to GOLD. That's another one I've done. Just the Barrick Gold, the gold corporation. Barrick,
yeah, I think they're the largest mining company in the world. So Barrick is one of the super seniors.
Right.
Okay. Now, for those people who are on the fence, right? And you've made so many, to be frank, you've made a very good pitch actually that people should want to do this for building a community, for getting better returns, for spreading the risk. I think there are lots of great reasons to learn to be more of an active investor. Now, how do people go about learning the various options at their disposal, right? Because when they go on there, when they either talk with a broker or deal with a discount platform, maybe they just don't know how to deal with the variety of options they can choose.
Right. Are you talking actual options market?
Yeah, actual options markets. Yeah, actually engaging away from just buying, right? Because there is just a plethora. I know the term options is used in different ways. Yeah, there are a plethora of vehicles, we'll say, for engaging. And are you just going to tell us basically just be patient and put in the time and learn them one by one, trial and error?
Well, you know what I would do? First of all, I'd start paper trading some of these. And I actually, it's funny you asked this because I have been asked so often over the last year that I actually just put together a class. It's called the Total Options Jumpstart, just to explain what options are. And you see it with the meme traders. They're jumping in and they're trading options and they're taking on risk that they don't understand. So,
right. That's my fear.
Exactly. And they're just excited and they jump in and it's crazy. But if you can start slowly, but this is what I like. Take a chart of, let's say if you like trading GLD. So take a chart of GLDs, kind of back it up. You could get retroactive option prices with like a broker like Thinkorswim. And you can paper trade. So you can take a half an hour on a weekend and just back a chart up and look at the option prices of what they were a week ago and see how they moved as the stock progressed. Because I'll say all day long, you could paper trade, but it's a slow, boring process, right? To get in and put a trade. It's a fake money trade. How many of us really pay attention to our fake money trades? It's easy to ignore. So I like that idea of taking just a dedicated period of time, take a stock or an ETF that you're interested in, pull up an option chain, do it in Thinkorswim where you can get option prices from a week ago or a couple weeks ago and just see how it moved. And you're doing kind of a retroactive paper trade in a way, but that'll speed up your learning curve. But I think the best way to do it is jump in and practice, maybe not with real money, or maybe just with one contract with real money, right?
Well, I'm actually reading, I think it was How Genius Failed, or When Genius Failed. This book about the failure of long-term capital management and how these geniuses or brilliant men got too cocky with all their different trades. And one of the themes in that book, though, was that when these gentlemen began in the early 90s, there was much more profitability, low-hanging fruit. Now, and during I think 5 or so years that they were active, the margins were getting leaner and leaner because more and more people were getting involved. Have you seen that in your own experience, that the low-hanging fruit is either moving or has withered away a little bit?
Yeah, I guess I haven't, not from
No.
what I've done. And I started trading about the time that they probably, in their opinion, thought that the low hanging fruit was going away.
Sure,
So
sure.
as a retail investor, I don't think that's an issue. I think there will always be opportunity, and there always are. I think it shifts. You know, for a while, it was solar, and there was tons of opportunity there, and then we've shifted, and now it's electric vehicles or semiconductors or anything related to the metaverse. So I think that opportunity is always there, but it does kind of shift a little bit, and that's where
Yeah.
just sticking with groups or hanging out, like reading the newsletters and things, kind of keeps you aware of what's happening, what's current.
Yeah, those gentlemen were very heavily focused on various bonds. So
Right.
I assume that those markets have grown more efficient with time. As you say, there are always
Yes.
new openings. There's a lot
Right.
more we could say with Markay Latimer, and I'm just so disappointed I wasn't in New Orleans to get to see you speak. But
Next time.
people, you can get the recordings actually. So go to neworleansconference.com and pick up a recording of Markay's presentation there. Otherwise, just go to her website, markaylatimer.com. And yeah, the two deals she has going are markaylatimertrades.com/gold, and the other one is /candle for the ebook. Now, what's the gold pitch?
So that is a kind of a set it and forget it sort of a trading strategy that it's pretty great. It takes advantage of options that are really crazy expensive, and instead of buying them, we're on the selling side. So it's kind of a neat thing that a lot of investors that you don't want to trade. You don't want to spend a lot of time doing this. You got a busy life. You already have your thing going. This is just one extra thing you can add in. That's, again, that set it and forget it, and it's a great strategy. It's got a great track record.
Yeah, so this is basically a site which will give you an example of something you can use to just dip your toes in the water and get a feel for it. So, I mean, I recommend this is great. I'm really glad. And she has a long archive of YouTube videos too of just the very, very basics. What is an ETF? What is a stock? So there's no hubris here. Just go and, it's like the complete idiot's guide to whatever you want, and so, which were a huge hit because people realize their shortcomings or lack of knowledge and they want just the basics. Let's not just pretend that we're all experts or anything like that. So that's great. Markay, any final thoughts for our audience before I let them go and we enjoy our Friday evening?
Yeah, I would just say, gosh, if you aren't involved in trading a little bit longer term, some level or another, check it out. Like you say, dip your toes in it. Check it out. Check out that ebook if you have any interest in learning more about reading a chart. I really keep it simple. I think again, like I mentioned, you don't want to get sucked into a bunch of complicated stuff. Keep it simple, test it out, see if it's for you, see if you like it. But I think it's a pretty fun world.
That's great. Thank you, Markay. And people, if you want to get any of the links, go to goldnewsletter.com/podcast. Otherwise, we'll see you next week. Thank you, Markay.
Sounds good. Thanks, Fergus. Take care.
Beautiful.